The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, once more in the breach, dear friends. The Power Trading Hour, where there's no bull side, no bear side, just the right side. And that right side is down today. 21.25 on the S&P cash. I'd have to look at the charts, but maybe 30 minutes ago or 45 minutes ago, we were toying around at the lows of the days at 21.20, kind of the test of the lows Monday morning. And what did we have? Well, they had to go get somebody out of bed. It's I don't know what time it is, but it's probably close to 1 o'clock in the morning in Japan. So they made some poor bastard get out of bed and say that he was thinking about going even more negative on rates. Well, that bounce has now lasted, it's pretty much exactly where it was before they announced it. So, I'm going to say, an hour? A little less than an hour. That bounce lasted about 45 minutes. We had the Fed, of course, come out. We had the plunge protection team come out. We had a lot of people come out. Everybody's got a bucket of water to throw some on the fire here. But right now, doesn't look like the Fed and or the Treasury, with its big movement out here to try to quench the higher dollar. We're up 41 cents on the dollar index. Can do much. 21.20, kind of that line in the sand. I'm expecting that this week we touch 2100 before anything much else happens. That it lasted all of one day. I thought maybe we'd get maybe even today to see what was going on. And then Wednesday maybe we'd go down, but I continue to think, and we talked about it on Friday, that you got to give this market at least 3 days before you think that there's any kind of even medium or even short-term bottom in this market. If you're talking about intraday, that's another thing. But 2100, I think, is where this thing is going now, mostly because there's so many people on the wrong side of the boat. Secondarily, I covered in my newsletter this morning why I thought that these levels were coming down here, and that was there just aren't any shorts. No one wants to short this market. Everybody is convinced that this market is going higher, and therefore it's going lower. 21.27 on the S&P cash, volume 2.5 billion shares as we start the show. So volume's pretty good. We also had kind of a little mischievous stuff that's happened. And since it normally happens when and right before big extended moves, I kind of like seeing it, although the first few times it happened, I was somewhat perplexed. And that is the whole dropping of the volume from the New York Stock Exchange. I always, in fact, the early days, maybe 2002 and 2003, 2001, it was not uncommon to see somebody just back there playing in midday to pull a LAN cable out of maybe the computers that fed all us average Joes, the average trading dude out there. Everybody's quotes went down, and it was always mysterious, but it was always when you needed them the most. Some people would have said that, of course, it was the volume that slowed down the quotes. I was never a believer in that. They could have built computer systems that went that fast. I suspected that they did not do that on purpose. And always figured, if you flipped one of the IT guys in the back $300-400 to maybe pull a cable at the wrong time, could you make a couple of $1 million? I think the answer is yes on the backs of the unwashed masses of the retail traders. But I don't know. something I will never be able to prove, like aliens at Roswell. But just the same, it might be true. I don't think the aliens were at Roswell, by the way. It's one of those kind of things. Anyway, as always, we come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Well, that's interesting. But what do we have going on today? Well, it's just like I said, it's more of the same. But my guess is that we close down here today. They were selling a huge amount of calls into yesterday's action. And about 3:30, I decided to go ahead and continue with my trades to the downside. I am rewarded today. And I know that it had to be very tough. Most people don't understand markets, especially bear markets. They haven't really been in one that has been extended. When you go back and actually look at them, they tend to be a lot more like the one in 2000, 2001, and that is violent disagreements between the bears and the bulls. I think everybody knew in 2008 that there was only one way, and I think that made that one a lot easier. It was over fairly quickly, relatively. I mean, the worst of the destruction. The real destruction and the place that I saw so many traders cleaned out was that 2000, 2001 area, mostly because the volatility was so extended that they couldn't make it a few days. They'd make a bunch of money and then give that and more back because every day was like what you've seen the last 2 days. And, you'd have stocks that were $200, $150 the next morning. They were $225 the next night. And since there was no real reality as to price and value, everything was a beanie baby. Half the stocks had no income. It was one of those times where literally the price that you put on it could have been anything. Who knows if they were right or wrong? There was no market to put anything back together. Many people talking today at the the conference on CNBC and Bloomberg are sponsoring today. One guy actually just kind of about an hour ago was saying that he blames the Fed for everything. But I don't know if you can do that. There's enough blame to go around. In the euphoric episode, no one blames themselves for the money that they're making. And when everything goes south, they don't do much either. They tend to a lot of finger pointing, and the other four fingers pointing back at you when you point your index finger is probably what should go on. Anyway, 2126, 2.55 billion shares as we start the show, and we're going to get into some histoire.
Then it's all just a little bit of history repeating.
Actually, what we have going on for history today is, the break. Already into it. We're going to talk about what happened on this day in 1814 and why it's appropriate to think about it today when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. We've got Chris in Orlando. How you doing today, Chris?
Hey, I'm doing pretty good. I appreciate you taking my call.
Okay.
Got a question on LABD. Are you bearish on the biotechs? What are your thoughts on the biotechs?
Yeah, I'm very bearish, and I have money backing that.
Do you think, this thing is at a 52-week low. Is this a good area to get in on this stock? Do you think?
I don't really chase. We're in the IBB.
Right.
And so I don't play this one near as much. But I'm looking for the IBB back to 240. So
okay. And it kind of
I think you can extrapolate that. Is there a reason why you, I guess just because you like the ETF?
Yeah, and, to play a stock, a $20 stock, as opposed to a $260 or $280 stock.
You don't do options at all?
No, I've been listening to all the shows and everything, and I just don't feel comfortable enough yet on the option side of things.
Yeah, this would be my call on playing biotechs.
Mm-hmm.
And that is that there's a very narrow window where you can get in.
Right.
They're so volatile that it's very tough to make money in the ETFs. If you can catch a put or a call on the right side of them, then generally the risk reward is a lot better than playing the ETFs out there. Okay. So just the more volatile a stock or an ETF gets, generally the harder it is to get in perfectly at the right time and get out fairly decently.
And those direction triple leveraged funds are always, I always try timing it right.
What I'm saying is when it goes against you, since you have no real, you have no limitation.
Yeah.
The risk reward gets poorer. I only tend to play the biotechs when I can get a option on the biotech, and I've got to have something like 5-to-1 to 10-to-1.
Yep.
Even then, for me to get involved in it. So I'm not saying it's a bad trade. I'm just saying that if I was going to play the most volatile sector in all of Stockton,
Yeah.
I probably would want to have my risk limited, and you might want to learn a lot more about options. And even if you're not playing them now,
Yep.
put them, find the different options on, let's say, the IBB, and watch how they move compared to the IBB itself, and and start at least learning. That would be my one caveat: is in all of this, the risk reward in the ETFs, because of gaps up and down, tend to be asymmetrical. And in an ETF, there is no limiting, especially these 3X ones, limiting it. So you can still make money.
Right.
It's just very hard to limit your downside risk in these. And that's why I tend to not do highly volatile sectors with the ETFs themselves if I can avoid it. Let me put it that way.
That makes sense.
So that would be my only thought on it. I'm looking at 240 on the IBB. Mostly that's going to we're probably going to see whether we get it in the next day or two. I expect that we see 2100, maybe 2090, maybe 2090, maybe 2087 on the S&P.
Okay.
And that's going to tell us a whole lot. But man, I haven't been watching this one, but if you've watched the IBB here, you are wound up tighter than a well, several things. But anyway,
that definitely helps. I appreciate it.
If you crack, we did go down to like 276 on the IBB, and everybody flooded right back into it. We flooded back into it twice. We've got probably people now on the 4th and 5th buys that are on the wrong side of the IBB or in the biotechs. So if you do crack down here, I think that 240 level is a great target in it. So you might just put that one over that.
Awesome.
Yeah, I think it's in there. But to me, the risk is especially with the disintegration of the futures on a lot of those stocks in that 3X could be problematic. So I'm out into the Octobers, so I've got some time, at least with the options.
Perfect. I appreciate the help.
Thanks for the call. You can be like Chris from Orlando. Call me at 877-927-6648. The more volatile things are, and especially in things like in very volatile sectors, we had the VIX down at 11 or 12. At that point, it is so far cheaper to buy the options than it is to go into the ETFs structures where you have a lot less ability to control your losses, especially when we get into kind of big moves like this. I wish we had these kind of ETFs back in 2000 and options to go with it. There wasn't anything out there. You were playing the equities themselves, and it wasn't that easy. On the IBB, we're at 281, over a little million shares right now, as we toy with coming in, testing the lows in here. This is Tuesday. I'm expecting that we do see this kind of low come in for Friday's expiration, either tomorrow morning or Thursday morning, something like that, and then maybe a little bit of recovery on Friday. But again, 2097, 2087 could see a very quick move in the S&Ps down to that level. And mostly that's based on how many times the Fed, then the Treasury, and now the Bank of Japan have tried to interdict this with little or no movement. And I showed it in the newsletter this morning. How much time do we have here? Don't have enough time. In fact, I'll just talk about it. We had probably one of the lightest days of shorting yesterday of all time. And you got to think that confirms my thesis. and that is way, way, way too many people only believe this market can go higher, don't believe that the Fed will ever raise rates, and why we may not raise rates this round. My guess is that they are going to talk extremely hawkish, operate extremely dovish, and as soon as the election is over, we're going to see a rip of 2 or 3 rate hikes. Normally, now we'll get back into it, but normally we should have seen those rate hikes last year. I suspect for political reasons that we did not see them. I think that's the reason Bernanke got canned unceremoniously on 60 Minutes, and that was that he thought that before the elections were out, he wanted to do it as Fed presidents had done before, and that is get the worst in for the change of the new president, give the new president kind of a clean deck. We have not gotten that. And we'll talk more about this on the opposite side. 21.25 on the S&P cash, 2.63 billion shares.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we'll continue on. Oh, you know what? We never got to our history. We need to talk about that. On this day in 1814, Francis Scott Key pens a poem, which is later set to music, and in 1931 becomes America's national anthem, the Star-Spangled Banner. The poem, originally titled The Defense of Fort McHenry, was written after Key witnessed the Maryland fort being bombed by the British during the War of 1812. The poem was printed in newspapers, eventually set to music of a popular English drinking tune called To Acreon in Heaven, which has if you look that up, there is a very dark side to that song and that music underneath it, which is very weird. But since about 1600, that tune, the music underneath it, had been used in rather bawdy places of England, of people of note and character, as they like to call them back there, and the lords and all the other stuff. People began referring to the song as the Star-Spangled Banner, and in 1916, Woodrow Wilson announced it should be played at all official events, setting up Mr. Kasternak and his football team all kneeling instead of standing. And, of course, my favorite thing of all of it, he's going to get fried tomorrow night on South Park. And that's back during the election season. There can't be anything better, can there? Probably the best political dissent on all of TV, and because you can't actually say anything political anymore. Everybody's got a stone to sharpen on it. But, some 4th and 5th graders from South Park can kind of tell the truth occasionally. I imagine everybody is going to get shellacked in the next 10 weeks, and probably the last season of South Park. Chanos was on TV today, and he's going back. Not a lot new, although he did get into the nuts and bolts of some of his short positions. Listeners to this show will know that I only listen to a handful of people that do not constantly lie and talk their own book out of school. Chanos basically talks his book in school, but doesn't make wild predictions. Does say that his opinion, and leaves it at that. He's been short Tesla and Solar City for a while. If you look at Solar City's price, it doesn't look like that thing's getting bought out at $25 anytime soon. But the most interesting thing is he did bring up the books of both Tesla and Solar City and the other companies that he's got his finger, Mr. Musk has his fingers in the pie. Interestingly enough, he says if you added all his companies up, they burn $1 billion in losses every single quarter. That's going to be $4 billion worth of losses every year. And he says that without cash, Solar City is BK in the first quarter of next year. He does also say that Tesla and many other branches of all of Musk's stuff will have to have huge amounts of inflows to handle the massive amount of outflow and losses in that company. Also, he is short Alibaba. He's basically saying who understands the books. They're cooked. He doesn't know which way, but does show that when you dig back into the books of Alibaba, that no one tells you, and they will not tell you, and if you bring it up, will ignore you, how many things in Alibaba are and do work. Alibaba seems to be, if you haven't paid attention, buying everything that isn't nailed down. He went through that a bit, but also just how stuff gets delivered, how much that stuff gets, the cost of that delivery is just total vapor out there. You know my opinion of Chinese stocks, and they are the Roach Motel. You will check in and never check out. And you haven't heard about anybody being able to sell their stock in China lately, have you? If I was in something, it would be, if you had to play these, another excellent case for using options and having a very limited risk if you have to go long anything in China. And if you're going short, the question is whether they just lock up that market and what happens to the ETFs in China if China does decide just to lock the market up. Are you locked into those ETFs? Can't get a straight answer from anybody, and why I continue to say if you're using options, okay, maybe there's a case to be made for trading some of these Chinese stocks. I would say to the downside, I wouldn't want to be trapped in anything that meant that I couldn't get my money back for another year. Of course, nothing going on really to speak of until Oracle's earnings after the bell tomorrow, Thursday night. And then, of course, the Fed meeting next week. Lighter volume probably Monday and Tuesday. So the question is just how is this going to set up? But my guess is that we're going to set up with lighter volume. We're going to have heavy volume probably into Friday, probably a little bit of Monday, light volume Tuesday. And if they push that up into the meeting, probably a good opportunity for the next big leg down in the markets. And we could see those go maybe into the election now. At least that's the big picture out here. We're going to get into some charts. You can give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can always post a message in the den. Question in the den, how much did Amazon burn in its early years? And I don't know exactly the price point that he shorted Alibaba, but I think it wasn't too long after the IPO. But I'll have to remember. But very good question, because everybody's comparing Amazon to Alibaba. And the difference is that in 2002, Amazon went cash flow positive. They didn't need any more money after 2002. Guess who needs money all the time? And that is Baba. I don't know exactly. I think if you Google it, you can probably find out where he shorted it. But he's short SolarCity, short Tesla, short a lot of stocks out here. And why he does have some fundamental reasons, he has a pack of accountants that go through all the filings of these companies. He knows what to look for when things are probably not exactly as they're supposed to be. He has a very good eye for that kind of stuff. Of course, he is the guy that made his big bones on many companies being rather phony, especially in accounting. But his big claim to fame, of course, was making all that money in Enron when he was betting it went to zero. I think he was buying he was buying puts on it at like 50 cents or something, while it was up in the $80 or $90 range. And I think he got puts like at $40 for 50 cents. And of course, it went that summer to bankruptcy. But he pretty much said that it was even worse than he could have imagined. That was Enron. We'll be back after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And it's just having a little conversation here in the IMs during the break. But as one of my subscribers says, I'm used to you now. So he knows how I played. But what else can you say? I actually had a good piece about that. One of the best parts of Reminiscence of a Stock Operator I put in my newsletter this morning. And hopefully everybody gets it. But expensive lessons learned, mostly about how to sit on my hands and let profits grow and try to get rid of your losses early and or sit on them appropriately. Amazon.com, not a big move today in this one, and it continues to look like it's topped out. I just don't think this one's going to be the one that is affected the worst coming in. Doesn't need a lot of cash. Does have good cash flow. It's the stocks that are going to need cash in the near future that are the ones that you need to be watching. Anything that burns huge amounts of cash, the biotechs are kind of good on that. Right now, the stocks that are burning the most cash aren't even public. And that's where the bank shot, I suspect, comes in for all those tech stocks. And we haven't seen that quite yet either. But anything from, I'm watching the prices of real estate in San Francisco. Those could easily snap, and that's going to be a very good indication that the throwing huge amounts of money at anything that might turn out to be anything is over. There are just a bunch of what they call unicorns. Those are stocks that have never been public, over $1 billion in value in private stocks. But everybody's fighting for real estate values. They're insane in San Francisco. When that snaps, I think that's going to set up some huge issues for all the people that are now kings of all they survey out there. And I'd get a lot of chutzpah. I don't want to even call it chutzpah. Maybe chutzpah. Shaking their fists at the gods right now, doing a lot of things that have nothing to do with their profitability, getting involved in everything that they think makes them wise and appropriately distinct among those people out there in the Bay. But there were a lot of bad ideas that came out of the Bay. Everybody taking LSD, other things. And I think they're getting kind of to that level right now, especially almost the level of political purity that you have to have a job out there. I think that is not going to do them a good service in the long term. Good decisions come from diversity and they are diverse as long as you toe exactly the Marxist line that they love out there. And that's going to blow up in their face very soon. Anyway, what do we have going on? We looked at Amazon out here. I don't see a lot in that one today, light volume. But again, it's when we get back to these lower levels and how we close out. I'm expecting one more day in the S&P, kind of like we've had today, which is a big, 30, 40-point move in the S&Ps, maybe a 50-point move. But again, we'll see. Maybe we go into light volume into the Fed announcement and actually turn around there. But right now, I was expecting that we probably turn around on Friday, light volume up Monday and Tuesday, and maybe the hawkish tone, but the dovish actual delivery of what they do will tell the market that we are going higher. But of course, the market always looks pretty much 6 months to 9 months into the future. And I think what the indigestion that we have right now is a part of that. Anyway, give me a call, 877-927-6648. Email me at path@tfnn.com. Did have a question about some stocks here. If I can go back to that. Okay. Question about WFC. Do I see anything in this one? As we talked about this one the last few days, and even brought it up before it became big news on Friday. We brought this up on the show last Thursday, and that was, of course, the fraud issue with a lot of stuff going on. Good point made in one of the articles I read today about it, and that is, you really mean that they could make 5 million new accounts and no one noticed? This is certainly one of these things where there's probably, if you see one cockroach, there's a lot more. And I think that's what's going on in Wells Fargo. But 45.50 seems to me like a very good conclusion. We are down with accelerating volume today with 40, we won't call it 42 million shares already. And you got kind of a high volume candle back here on the 24th of June. That was 46 million shares. We're kind of into the very top of that right now. But we also have a double gap. Let's go back on that one. And that's where I suspect this one is at least going. Let's go back here a little bit. There we go. That double gap comes up and starts on the 12th of February. That gapped up on 28 million shares. We gapped down through it on the 27th of June with 35 million shares and gap back up again on 27 million shares on the 28th. So this is a gappy little sucker. We are closing the gap of the 8th in Wells Fargo of August 8th. But I think I'm seeing so many stocks out here coming back, aiming, and everything pointing to a test of these double gap lows out here at about 45.50 on Wells Fargo. UNH is another one on the list here. UNH. Had a lot of people email me today. You can do so at path@tfnn.com. Don't see anything other than a giant trend here. You've got just on a regular retracement, a 50% retracement on UNH would take you to 126. We're getting kind of close to 382. That would be $130.36. So you still have $2 or $3 down here on United Health. It had some news out today, just kind of going sideways today. But when we're looking for levels back in this move, certainly could see it. If you went to the 618 or 682, 618, 382. Okay, 618, 2163. So, this move, these big moves can have fairly large pullbacks and still remain bullish. But again, these things did trend fairly strongly on the way back up. So I would not be surprised to see these things get some decent, at least 50% returns or retracements into these moves up. So if you are thinking bullish out here, I think that you've got at least a little bit more on the downside before we start buying these stocks on longer term moves. Anthem, I think. ANTM. Oh, going to the break. That means we've got one more segment left. Call quickly, 877-927-6648. Email quickly, path@tfnn.com. Type in the den quickly.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special 1-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMark's TD Setup, TD Sequential, and TD Combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all, by price relative strength divergent pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Had a question from Eli in Sarasota asking me what I thought was probably the most important chart to look at over the next few days, other than directly looking at the S&P or the Nasdaq. And I think it's probably this TLT. Hopefully everybody can see it on Tiger TV and in the den. But this is what I've been kind of looking at as the first level down on this, and pretty much where it needed to go. And it's done that today. But I'm going to explain this. I know a lot of people don't use confluences. We probably don't talk about it a great deal, mostly because the market patterns haven't favored it. Occasionally, I will talk about it. But it's one of these things that maybe goes away for 6 months and then you use it for 2 months a whole lot, and then it goes back away because of the trading patterns in the market. But this is one that you should be looking at. It is one of the biggest patterns out here. And what happens, what you want to do in confluence patterns is take two different Fibonacci movements and put them together. You then look to see whether there is a big movement, or a very small amount of money between the 382 and the 618 of each of them. The bigger and the smaller one, and I'm showing them here. But what you want to do is you basically have what they called a focus number. This is a Joe DiNapoli thing. If you want the very, very long version for $180, I think you can buy his book on Amazon. If you want the shorter version of it at half the price, I think you can buy Tom's book and get a bunch of other stuff too. But this is what he called the main node, which is this July 8th high. So you figure out that's the number you used for both Fibonacci retracements. Then you go back down to the previous lows. There's two at 127. It's not going to make that much different. One on April 26th and one on March 11th. And you can look at those as the first ones. And then you go back to the November 9th, 2015 low at 118. Now, if you put those together, you find out that you get the 382 of one comes out at 133.42, and the next one comes out at 133.83. So you got about, 40%, 40 cent difference? Yeah, something like that. 41 cent difference out here. And that's exactly what you're looking for. You're looking for two things in these confluence levels. I don't think when I even did day trading, I never really could make these things work on the day. These tend to work. The longer and bigger these patterns are out in time, the better they work for me, at least in my ramblings around here. We've got a minute and 21 seconds. But I did want to get this out here before the end of the day. And that is these levels are very tight. They very much like to bounce off these things. But if they break them, that means that your next level down is about 128 to 129 on the TLT. Now, when we look at the actual energy in this, the volume is big. Volume was light. Energy was light on this way down. You could kind of look at it, but we had a couple gaps down. We're hitting this level. My guess is that we are and do have some kind of problems in the bond market that are surfacing. I know a lot of people have talked a lot more than me. I'm just looking at the results in the chart, I'm not a big bond guy. But there is something going on out here. This is the place to do or die on the TLT. So watch that very closely also into the close and over the next few days. Everything says this is the line in the sand for the TLT. It breaks down further. Watch out for the general markets too. Sell when you can, not when you have to. We'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.